Hello there YouTube, welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys an update on how much dividend income I am making from my portfolio with this amount right here, which is 156k. Please don't forget to like, comment and subscribe. Subscribe to the channel. Click on the link, click on the subscribe button down below and click on that bell icon. So every time I post a video, you get notified. Let's get right into it. Current value of my portfolio is 156,138. So far, my portfolio is up by 13.66%, and that's since November, December, January, February, March, April, May, June. That's 8 months. In 8 months, my portfolio is up by 13.66%. In these 8 months, I have made a dividend income from this portfolio for $1,200. That comes out to be roughly about $153 per month. The current dividend yield for my portfolio is 1.63%, and the current annual income from this portfolio with this dividend yield is $2,546. The dividend yield is low because at this stage in my life, I'm keeping this dividend yield low artificially. I'm going to increase it as my portfolio matures and grows. And down the line, I want to take this dividend yield to 5% to 4%. But that's in coming next 10 years or 15 years. Right now, I am looking to invest in growth companies, value companies, and dividend companies. Just have a very well diversified set. But I'm a little bit more inclined towards growth at this point in my life. So that's why I have a lot of tech holdings. The biggest portfolio is tech sector, which does not pay out a lot of dividend. And so there is this less dividend yield, but it will increase down the line. The biggest dividend payer in my portfolio is JEPI. It is currently paying me a dividend of $500 a year. So JEPI, it's JP Morgan and Chase's ETF. They trade option. 15% of the portfolio is with options, and the rest is invested in companies like growth companies and a very well diversified portfolio. I have made a separate video on that. So that is the biggest dividend payer. The dividend yield it fluctuates. It goes from 6% to 7% to even 8% sometimes, depending on the returns. And that's what they pay out to investors. The second biggest dividend payer in my portfolio is JP Morgan and Chase, the bank. The stock, it gives me a dividend of $236 every year. Currently, I hold about 66 stocks of that company, and it is a really great dividend payer, and it's a really solid company. I mean, it's like investing in the government, basically, United States government. So it's really safe and secure dividend payer, and yeah, I love that sweet dividend income from this company. The third biggest dividend payer in this portfolio is AbbVie. So AbbVie is pharmaceutical. Currently, I hold about 44 stocks. The dividend yield is 4.67%. The dividend income is $229.74 per year. So that is my third biggest dividend payer. The fourth biggest dividend payer in this portfolio is Realty Income Corp. So Realty Income Corp, it pays out a dividend every month. Currently, I hold about 77 stocks of this, and it pays out a dividend of 4% dividend yield, and the dividend income is $216 per year. The fifth biggest dividend payer in this portfolio is Duke Energy Corporation. Now, this is an electrical company. Electrical companies are really stable, safe dividend paying companies because their price is stabilized by the government. So there is not that much competition. There is stable cash flow. There is not that much volatility. The price won't go up and down like crazy, but there will be that safe, stable dividend income. Currently, I'm making about $156 yearly from Duke Energy Corporation. I have about 40 stocks of this company, and the dividend yield is 3.82%. In this portfolio, I hold 22 companies. Not all of them are dividend payers, but some of them are. So this is the fifth one. The sixth biggest dividend paying company in my portfolio is 3M. 3M is currently paying me a dividend of $151.85 per year. I hold about 26 stocks, and the dividend yield is 2.92%. It is also a very, very safe dividend paying company. And that is, you will see the trend in my portfolio. All the dividend paying companies, they're very safe. They're very, very safe. They're like triple A graded safety dividend paying companies. I do not invest in risky companies or speculative companies. I do invest in high growth companies like Etsy or PayPal, but those I invest in because they have really solid growth numbers that they have shown in the previous years, and also they have a very good business model and good leadership, and all that kind of good stuff. So the next biggest dividend payer is Pepsico. Pepsico pays out a dividend of $152.52. I hold about 35 stocks. The current dividend yield is 2.90%. And the Pepsico is also in the snack business, in the drink business. They're a big name, big brand, and they're always, I think there will always be a demand for this product. They're continuously innovating. They also hold on Frito-Lay. They're continuously innovating, coming out with new products and new snacks and new items all the time. So I think there will always be a market for this thing. The next biggest dividend payer in my portfolio is Broadcom, trade ticker symbol AVGO. So I am getting about $145.73 per year, and I own about 10 stocks. So this is the dividend yield is 3.05%. So for the amount of stocks I own, this is a really good dividend income. And Broadcom is a really great, solid company. Really nice growth in the past 2 years, and I think the company is really doing well financially as well. The next biggest dividend payer in this portfolio is VYM, which is a ETF, Vanguard High Dividend Yield ETF. I own about 50 stocks of that, and it gives me about $130 every year. The next one is Johnson and Johnson. Johnson and Johnson, I own about 30 stocks, which give me $127.20 per year. The dividend yield is 2.55%. Next one is Home Depot. Home Depot, I own about 17 stocks of Home Depot, which give me about $112.17 per year. The dividend yield is 2.11%. Again, Home Depot is one of that uh, beautiful brands that that is not competing with Amazon. It has a space of its own, and they're innovating, coming out with new tech products like for contractors and stuff like that. So I think they will continue to do really well in the future as well, and there will always be a demand for this product. And I am a long-term believer in this company, and that's why I hold this in my portfolio. The next biggest dividend payer in this portfolio is Apple. Apple, currently I hold about 110 stocks, so this is my biggest holding in this portfolio. Apple is one of my favorite companies. I really like how it's led. I really like how the moat they have, how they keep innovating, they keep coming out with new products. Of course, there are certain assumptions like if iPhone goes away and stuff like that, but I think this company, they have a lot of cash on hand, and they're very well managed, and I think they will continue to do really great over the next 10 to 15 years. And that is my whole time for this business. Currently it's giving me $96.94, 110 stocks. The dividend yield is 0.71%, which is not very high, but again, this is a tech company, so uh, that is what the expectation is. The next highest dividend paying company in this portfolio is Equinix. Equinix is a data center company. It's one of the largest data center companies. um, I hold about 7 stocks, and it gives me $82.33 with a dividend yield of 1.52%. The next biggest dividend payer in in this portfolio is um, Target. Target, currently it's paying me $70.12. I own about 26 stocks of Target, and the dividend yield is 1.19%, which is really great. And Target, I think they have a niche of their own. They have a customer of their own. That's why they have a very solid business model. And now they're innovating with things online, coming out in tech, selling stuff online through their e-commerce platform. So I think that is a really great thing as well, and I think it will be here for the next 5-10 years. It will continue to do really well. Also, I have Chromecast. Chromecast pays me $68.71, which is for 74 stocks of Chromecast. Now Chromecast is well diversified across CNBC, Xfinity Wi-Fi, and then their cable TV network. It's a family run business, and it's really managed very well. They have a lot of cash on hand. Also, they have debt, but they also have the cash on hand. So I think it's going to do really well over the next 5-10 years, and that's what I hold this company for. The next on this list is Canadian Pacific Railway. Canadian Pacific Railway is giving me a dividend of $49.75. They just went through a stock split. Four split, so the stock was $360, $350. It got split into four parts, and that's what I got. So the current stock price is $71.79, and the dividend yield is 0.85%. Again, not a very high dividend yield, but the business is really safe and solid. The next one on this list is Capital One Financial, one of my favorite companies. Now, Capital One, they have a lot of cash on hand. They also have a lot of debt, but I think they are innovating. They're investing in technology a lot, and that's very well justified. I say Capital One is not a bank; it's a tech company. Currently, I hold about 20 stocks, which give me $20 almost yearly in income. The dividend yield is 0.60%. So that is the dividend income that I'm getting from this portfolio of this much valuation with this much dividend yield, investing in these companies. That is my annual income. And company by company, I have shown you guys what I make from each company, and that is great. But this yield will increase. I will invest more into companies that pay out good dividends over time down the line. That's what I call maturing of this portfolio. Maturing is the dividend yield will increase. The money will stop flowing into more high growing stocks and more into stable companies like 3M and Broadcom and Chromecast and AbbVie and Johnson and JP Morgan, companies like that that have good dividends, solid businesses. And that's what I call maturing of the portfolio. Right now the portfolio is still very young, but this dividend income compared to where it is right now and what stage personally I am in life right now, I think this is a really good start and really good dividend income for this portfolio. So that is my portfolio and the dividend income from these companies. If you like this type of content, again, like, comment, and subscribe to the channel. Thank you for watching. This is the Frugal Investor signing out.